Most crypto strategies look great on paper until real capital shows up. Hi, I'm Ted from mltech. Today, I'll walk through how we evaluate crypto trading strategies before allocating capital. To introduce myself, I focus on managing portfolios of institutional-grade crypto trading strategies. Before mltech, I worked as a quantitative trader, primarily in systematic market making in the crypto space. The goal of this video is to show the strategy funneling process we use at mltech to build investor confidence and also help trading teams understand what they need to have in place to get their strategies deployed. Of course, this is a very high-level overview, and we'll dive deeper in future episodes. Before we even look at a strategy, we start with the allocator. Every institution has different needs and constraints: capital size, exchange and fee tier requirements, and even what asset they deposit and receive returns in. It's critical to align on their risk-return appetite, expected return targets, max drawdown limits, sharp expectations, and what risk they specifically want to avoid, like exposure to market beta and directional delta. Next, we look at the trading team. We want to understand their background, how long they've been live, and their current and historical AUM. We also look for credibility signals, references from existing investors when available, common connections, and any regulatory registrations they can provide. First, we want to understand what the strategy actually is. How is it classified? For example, is it basis arbitrage, statistical arbitrage, options arbitrage, or is it more directional? What's the theory behind why it should work? And if there's a model behind it, what are the key assumptions and what inputs go into it? Then we look at the numbers: returns, volatility, Sharpe, and max drawdown. At mltech, we care a lot about consistency. So we check how far the data goes back, what portion is spec tested versus live, and how much real capital was actually behind it. The goal is to make sure the track record is meaningful when thinking about future performance. Next is trading behavior. How frequently does it trade? How much volume does it generate relative to capital? In general, the more frequently a strategy trades, the more likely positive performance is statistically significant. And finally, we validate the key settings behind the strategy: trading universe, leverage level in the base version, exchange and fee tier setup, and deposit currency. Last but not least, we evaluate capacity, how much capital the strategy can take before the edge starts to disappear. There's a quote I really like: "If we can protect the downside, the upside will take care of itself." In crypto, that's basically the whole game. We all know this market is violent. On October 10th, 2025, even large cap coins like XRP saw flash moves close to 50%. And in moments like that, you immediately see which strategies are real and which ones are just backtests. So we spend a lot of time on risk management. What's the cut loss logic? What happens when volatility spikes or liquidity disappears? If they've had bad periods before, what broke and how did they adjust? We also look at the actual risk control system, real-time monitoring, leverage limits, position caps, and liquidation risk, including margin call and ADL scenarios. And finally, execution. How do they actually trade in the real world? Is it a proprietary or third-party execution system? And what is that execution logic really driven by? For example, execution algorithms like PWAP can make a difference when scaling to larger AUM. Don't forget, at institutional scale, risk management and execution aren't secondary. They are the strategy. On mltech's end, we don't just verify historical performance. Whenever possible, we also track the strategy live to confirm it behaves consistently in real markets. That can include read-only trading access, monitoring existing live accounts, investor references, and third-party audits when available. And to meet the specific needs of an allocator, whether it's deposit asset, exchange requirements, or risk level, we work with the trading team to align the strategy so it can actually be deployed. At the end of the day, institutions allocate to systems they can trust, not just a backtest. That means a strategy needs more than strong returns. It needs to be explainable, consistent, scalable, well risk managed, and operationally deployable. That's exactly what mltech is built for. Filtering, validating, and aligning strategies to institutional grade standards so capital can be deployed with confidence. Thanks for watching. If you're an allocator looking to deploy institutional grade crypto strategies, or a trading team looking to get your strategy deployed, feel free to reach out to mltech. Thank you very much, guys.